Sparrow, you can see my screen, yeah? Hello, Sparrow, can you see my
Yeah, I can
screen?
see your screen.
Alright. So in
Yeah.
today's class, we're going to be talking about liquidity. I would have added the premium and discount class here, but because I did not do it in the evening class, I will put it as Monday evening class. Then we have a class on Monday, yeah. Then put it as um the next class I think the next morning class is on Wednesday. Okay, so I'll put it in the first evening class and in the first um morning class. It's not lengthy, it's just something that I can explain within 10 to 15 minutes, and then we continue with the main reason why we came, which will be the question and answer for like 30 to 40 minutes for that. Then the next evening class will all through be just questions. Then the next morning class will be like 10-15 minutes explanation on premium discount. Then the rest will be on question. The next morning class again, which will be on Saturday, will be on question. Gradually we are coming to the end of the class, just few more topics and we are done. The main topic that is just remaining is just entry confirmation. Okay, that's the main topic that is just remaining. The main reason why we are here have been treated, which is structure and liquidity. We read this here out here. Structure, range and liquidity is like the body of what we trade. Okay, so structure, range, liquidity has been treated. Liquidity will be treated now. Entry is what you use to enter when you get your structure correctly, which means that even if your entry is correct and your structure is not correct, you will chop stop loss and you're not trading in line with the trend, the range, the higher time frame, everything is wrong. You chop stop loss. If you don't see the liquidity and you just put your entry anywhere, you chop stop loss. So entry is like, by the way, the main thing is these three things I wrote here. If they are wrong, that's why you have to calm down, sit down and study the structure, range and liquidity like your life depends on it. Not this one you tell somebody to help you explain. This one you are taking it like, apart from this, I don't have any other way to make money. So let's go to today's class. The topic of today's class is liquidity. Now we have three major types of liquidity. Three major types of liquidity. Liquidity can be written in short form as LQ. You have the three major types of liquidity. Now, what are the three major types of liquidity? Number one, we have the structural liquidity. Okay, let's start from inducement. Number one, we have the inducement liquidity, which is short form, can be written, let's do brackets, in brackets, can be written as ILQ or IDM. The second, we have transactional liquidity, which is short for, can be written as TLQ. And the last one, we have structural liquidity, which in short form can be written as SLQ. So these are the three major types of liquidity that we have. Now we have treated one type of liquidity maybe unknowingly to you people, but I'm going to just explain it again. Now, some people ask so many questions about the inducement liquidity. Can the inducement liquidity be this? Can the inducement liquidity be that? Now, what exactly is this inducement liquidity? Inducement liquidity is simply the most recent internal break of structure. The most recent internal break of structure in a particular trend. In a particular trend, I mean is the correct trend. Okay, this liquidity have to be in line with the market. You know that market is on an uptrend, then you just see small thing coming down like this, and you call this thing inducement liquidity. No, it has to be in line with the trend. Now, every of these liquidities happen for a purpose. Okay, and for an inducement liquidity to be valid, it needs to break structure. You see, I moved this from here to here. It needs to break structure. Okay, it is not here like this. It has to be like a strong point. Now, a break of structure in your basic market structure teaches you that what that point becomes strong and the high or the low that got taken out becomes weak. So for this to be an inducement, it has to be a strong point internally. Now, why is it called internal? Because it is found inside the external. The external is the higher time frame, 4 hours, 3 hours, 1 day, that's daily time frame, and the like. So if the price is currently on, let's say these are breaker structures inside this external. Let me just skip the last break of structure that happens, and price has not created any break of structure again. If price is currently at this point, this last break of structure that occurred here is called an inducement liquidity. It is called an inducement liquidity. Now, an inducement liquidity is early traders trap. Early traders trap, which means that what some people might be looking forward to buying from this point, and they will get stopped out because they are not supposed to buy from the liquidity. Liquidity is money. Liquidity is money. And what is money? Money is what moves the market. So you should not be found when this money has not been taken to move the market, else it's your own money that will be used to move the market. So where are this money kept? They are kept in these 3 major types of liquidity. The other liquidity are situated inside this liquidity. That's why you see that even the I think Stevie might probably have taught you trailer liquidity or something. Now let me tell you something to tell you that trailer liquidity is found. Trailer liquidity, I don't like use all those terms again, because all those things are inside these 3 major liquidities. Now, for example, now let's use that your trailer liquidity. When we have internals like this, first guy, second guy, inducement, disruption, a trend line trader will say that what the third touch, right? And they will not say what that the third touch, there's going to be, I think what did they call it, maybe third touch for their whatever trend line liquidity, price tapping on it and then buying. Then if it fails, they might not say it's now what breakouts and retest something to sell. Those things are found inside these three major types and they do not hold. Now imagine selling from this point when there is no disruption, the trade will not hold. That's why those things are not reliable. The three major types of liquidity set sharp for all these type of liquidities. The inducement liquidity, don't ever think of buying at the inducement or selling at the inducement directly. There are methods you can use to buy or sell after an inducement has been taken out. Emphasis on taking out, not like you are entering directly. Okay, but entry directly is a no. So the most recent internal break or structure is called an inducement. It's called a trap. So let's go check it out on the chart. Now let's first of all, to get your internals, let's first of all check out our external, because I told you to get a perfect internal, firstly draw out your external from the 4 hours 3 hours time frame, whichever you want. Okay, draw out your external so that you don't make mistake. And when you want to draw your internal, don't draw it from the 4 hours time frame. Don't draw your internal from the 4 hours time frame. Let's keep this. I already explained this ranging part there. This might take our time. Let's just look a bit towards here. Okay, so now let's say that we are drawing our internals. We got taken out. Use this internal as a. This was an internal before. Price took it out and then bought. I told you there's an entry model to enter this. If you were buying directly at these internals now, you have taken a loss. The same thing happened, I think, around here too. So do not buy directly. Okay, there's an entry model to follow up for that. I don't think this did not break structure. Let's be sure. No, it did not. Okay. The same thing here again. This was an inducement. And what happened? Price took it out. Okay, before it bought. So that this became the new inducement and was still taken out. In case you were thinking of buying, you would have taken a loss. Okay. And then what? Now the most recent break of structure is what we call an inducement. This was the previous most recent break of structure internally. This guy here. Okay, this guy here. But what? Price took it out and bought. It actually reclaimed the inducement. This was the entry model used to buy. It reclaimed that, and then later took the inducement out, and then it came to the disruption. I told you that disruption will not hold. This disruption will never hold, and it did not hold. There are some things you see at a particular point that is a red flag. When we get to discount and premium, I will tell you one of the reasons why I said it will not hold. Your inducement cannot be this far and then you expect price to respect your disruption. No, there are some qualities you need to see before you enter directly. So now this little buy that is actually occurring here is as a result of this internal, which is the internal liquidity. Now, okay, internal liquidity, they are just like, okay, for those that attended the previous class, well, let me just leave it. I would have said something. But for those that attended the previous class, they are also like transactional liquidity. They are also giving, these zones were previous um strong points, but they turn weak now. So they're also in charge of what, giving these reversals for continuation. Don't think that it's like a full-time buy, except they want to be an overall disruption again, which I actually don't want that. I need some downtrend for a while at least to feel internal liquidities are taken out. So yeah, the most recent break of structure internally is your inducement. Simple and short, nothing complicated. Now the second one, if you do not know how to mark out your inducement, the structural liquidity will be your guide to mark out your inducement. But before we get to the structural liquidity, we're talking about the second type of liquidity, which is the transactional liquidity. Okay, now what is the transactional liquidity? Transactional liquidity is simply the type of liquidity that price uses to what, to cause reversals for continuation. Number one, they are also the type of liquidity that occurs after a higher time frame change of character. Okay, these liquidities are also in charge of flip zones. Traditional liquidity only occurs in the higher time frame. You cannot say that these things here are transactional liquidity. No, traditional liquidity is different from the internal liquidity. The internal liquidity is when price has created disruption, the other previous internals turn to internal liquidity. They turn to liquidity. That's why I have to clear them. It's almost similar to the transactional liquidity, but this one is it happens in the higher time frame. Put this all this thing. Look at how I learned this thing. I put them this way. In my brain, I take it like in the lower time frame, their change of character is called disruption, and their transactional liquidity of price clearing previous point after a change of character is called internal liquidity. So I put in my mind that lower time frame, internal liquidity clearing, disruption. Higher time frame, change of character, transactional liquidity clearing. This is how the transactional liquidity occur. Now these are 4 hours external. I've already explained range before, so I don't need to talk on it. Now the process of price giving a change of character, every other previous external turns to transactional liquidity. Okay, they are in charge of this retracement that occurred, and then a continuation, reversal, continuation. Whenever price comes into this thing, there should be little or no move to show that yeah, I actually tap on this thing, because it is that movement that enables price go back up again to take pending orders before coming back to clear it. Okay, so these are transactional liquidity. It's just like the internal liquidity too. After disruption, what happens next? Price turns the previous internal to internal liquidity. Or for the higher time frame, after change of character, price turns the previous external to transactional liquidity. And then what happens? It begins to take them out till the range low. I already explained range before. If it was lower time frame, if it takes out the internal liquidity, it's taking them out to go to the external to either buy or sell. But for the higher time frame, if it's taking out transactional liquidity, it's taking them to the range. Now let's assume that price gets exhausted and probably cannot go to the range. Okay, cannot go to the range. Maybe the range is far below and cannot go to the range. What happens? If there is going to be a new trend, what happens first? There should be an internal disruption. There should be an internal disruption first of all. Then we target to sell at the external. It is when the external fails that this place now turns to a change of character, and this other previous strong point now turn to what? To transactional liquidity, and the uptrend begins again. So that is just the storyline of transactional liquidity. If we are adding range to the explanation, here becomes the range low, this is still the range high. That's created three external break of structure. Simple as that. Let's check it out on the chart. It's actually pretty far. Seeing price, most especially gold, clearing transactional liquidity is actually really it's rare. Not like it doesn't clear, it doesn't like take. I'll try to like do the premium of this stuff before the next class, because I've not been trading this. It slipped my mind. So I'll try to do it so that the question and answer will have to go back to check this transactional liquidity very well. Well, let me just like give an example from here. For example, now if this external gets taken out, what's gonna happen is price is going to use the previous externals as transactional liquidity. But it's actually really will I use the word difficult for price to clear all transactional liquidity to the range. That's a very drastic downtrend. Like, oh my god, that's like price going back to like 2024, like 1 year backwards. Is going back to like, because this transactional liquidity, most of them were created like a year ago. Like this one was created around April 24th, April 30th, May 20. These are 2024. So for price now to come down to this point, it's always like very hard for this transactional liquidity, for price to clear all of them to the range, especially a range that created so many transactional liquidity. So it's always hard for price to like go back to the range instead. And for a pair like gold that likes just buying, creating all-time highs than lows, for price to like go down and down there below, it's actually really difficult. It's possible very well to come to the external. Is that one is very possible, but going down to the range is really hard. I don't say it's impossible, but it's hard. Nothing is impossible in trading. The market is dynamic, and at any point it can do whatever it likes. It doesn't need to take permission from you. You're not the creator of the market. You're on 1 hour time frame for the TLKS. It's the same thing. It's just that you people are learning. I can stay even in this 1 hour, 4 hour time frame to draw my internals. It's just that you are learning. That's why. I'm already used to it. That's why I can stay on the 4 hours to like mark it. But whichever way, you already know how to mark your external. I gave the qualities of a valid external. I told you what it has to do. Okay, I told you it has to create 3 or more internals. But once there is a change of character, even the externals that could not fully create the complete internals, and the ones that could create all of them, should be taken out, except price decides to reverse and continue the previous trend it was on before. Okay, apart from that, it is just still the same method. Okay, But for beginners, what you have to do is use the 4 hours to draw your externals, use the 1 hour to draw your internal. If you know you have like grasped this very fast, then fine. Use you can use let's say the 2 hours time frame to mark out your external and use the 15 minutes time frame to mark out your internal. If you know you have a very good knowledge of this, okay, you can use like 3 hours time frame or 2 hours time frame to mark out your external, use 15 minute time frame to mark out your internal. But for you that is still learning, you are finding it difficult to understand this, those lower time frames are very noisy. So you, any little mistake, you keep taking loss till you know one thing about structure is that once your structure is wrong, you will keep taking loss till somebody corrects you that your structure is wrong. Because why? In your own mind your structure is correct. At the moment your structure is wrong, your entries are not in line with how it is supposed to be. So everything will just be going bad, going bad, going bad until somebody corrects you. All everything with trading will not go well. That's one bad mistake about trading with the wrong structure. Once you trade with the wrong structure, everything you are doing will not correspond. Because why? Because the entries are now taking at counters. So it's not going to like, it's not going to work. Counter trading, it's not going to work. So the moment you are trading against the trend is counter trading, and trading against the trend is like trading with liquidity. Like you are the liquidity, at any point you can be taken out. So now the last liquidity that we have here is the structural liquidity. Now the structural liquidity is actually really simple if you pay very good attention. The structural liquidity is what qualifies an internal. Okay, now the structural liquidity, the main work of this structural liquidity, sometimes there are some entry models that this structural liquidity help to engineer price for you to enter directly with that entry model. So this structural liquidity here makes your internal valid. It makes your internal valid, and the structural liquidity is very simple if you can pay attention. It is just little break of structures that happen, just like when you have your 4 hours one leg, and we say that those little break of structures that happen inside the 4 hours one leg is the internal. That is how the structural liquidity too is. When you see a break of structure in the 1 hour time frame, and that break of structure has little break of structure inside, that particular point is called, that break of structure is called an internal, and those little break of structure you see inside, they are called structural liquidity. Now they can happen in two ways. They just have to be a break of structure, that is all. Stop looking at this point. When it's an uptrend, the structural liquidity happens below like this. When it's a downtrend, it happens like this above. It happens, the break of structure comes down. Because why? It's still the same method of creating what? Strong highs and weak lows. A structural liquidity for an uptrend cannot be creating strong high. No, the highs have to be weak and the lows have to be strong. The same thing for structural liquidity for sell. The high have to be strong and the lows have to be weak. This one the low strong, this one the low weak. So they happen in two forms. There are two ways a structural liquidity break or structure can occur. You can see them in two ways. Number one, you can see them with series of candle, 3 or more candles creating this break or structure. How? It happens with too many candles just moving randomly. They keep closing below each other till one gets exhausted and decides to start coming up. And once it comes up, it breaks a high, the last high that they created. It's just like normal break of structure that you know. It's just that it occurs inside an internal. And then once this break of structure occurs like this thing is a structural. This thing happens just one small something like that. Okay. Now, one thing you should know is that a structural liquidity cannot create a structural liquidity. What do I mean? Now, the second type of structural liquidity is the one that happen with 2 or 3 candles. How? You just need one candle to be there and then another candle to close below that candle. When that candle close below that candle, then the next candle should close above this one that close below this one. This is an uptrend. Then for a downtrend, I just need one candle here and then another candle should close what above it, and then randomly another candle should just close below this candle that close above that one. Simple. So a structural liquidity, this thing here cannot should not be found inside this thing. The moment this thing is found inside this series of candles, then this thing is no more a structural liquidity again. It is now an inducement, because it is an inducement that this structural liquidity is supposed to be found inside, not a structural liquidity. A structural liquidity cannot form a structural liquidity. It's a structural liquidity that have to be inside an inducement. Let's go and check it in the chart. Now I'm going to give you up to 30 structural liquidity because you people say you find it difficult to understand. Let me go to the 1 hour time frame. Each internals I will draw the structural liquidity. I will show you the structural liquidity inside of it. Please pay attention. Thank you. That's what I want to. If people complain a lot, this person has said this thing now. Be direct to whatever you are teaching, showing it in the chat. That's what I want to do now. I have to draw a template first. How will you understand if people are too forward? All these things you do are quite discouraging. You don't even allow me. Maybe one day I'll just allow you people to just teach and let me see how good you can teach for me to watch you. I just gave an example and I said I'm going to go to the chat to draw 30 examples for you. Now let us use from here. We're going to be taking from this point. Okay, we'll do from here. Let me draw all the internals first. We'll do from here down to the current price of gold. Let me clear everything off.
Sorry, can you hear me?
Yes, I can.
Is your TV set on? Because there's a background noise that keeps coming in and I've checked all the participants. Everyone is muted.
Sorry, what did you say? What did you say? Sorry.
Like, is your TV set on? There's a back. Can you hear me?
Yes, I'm hearing you.
Hello?
I can hear you.
Yeah, I said, is your TV set on? Did you get my question?
Is it okay now? Sorry, is it okay now? I think it was coming from the room. Is it okay now?
Yeah, it's better.
All right. So let's do like 30 examples of this structural liquidity. Now pay attention. I'm going to be calling them by their names. Now I'm going to be referring to the structural liquidity that has 3 series of candles. I'll be calling them series, and the one that have 2 or more candles, I'll be calling them dual. So the words we are going to be using now is series or dual. So just pay attention. The dual will be the one that it's like 2 or 3 structural liquidity that made it up, like what made it to be the structural liquidity. Then the other one will be the series. Okay, that's like too many candles that created this particular structural liquidity. Now let's start from this particular inducement. So now this is the previous high created here. You want to get a structural liquidity. Now the first quality of a valid internal is what? It should clear out a structural liquidity. This one is actually on probability. Okay, it can be there, it might not be there, but whichever way, the one compulsory is the one of creating structural liquidity inside of it, but the one of clearing structural liquidity is on probability. Now this particular structural liquidity that it cleared is, let me use the word, is the dual structural liquidity. Now let me zoom in very well so you can see it cleared the dual structural liquidity and also cleared the series structural liquidity. These are just like some informal way of calling it. I don't mean like it's what it is called, structural liquidity. I'm just breaking it down so you understand. Okay, so now this one is series, and this second one that was created here is dual. Now this guy over here is an inducement, but what market turned this guy, this was the structural liquidity of this guy. This guy was an inducement, but what happened to this guy? This guy got taken out by sweep. So this inducement now turned to what? To liquidity. That's what I'm telling you, that an internal can sweep an internal, even an external can sweep an external. So this guy over here was an internal before, because why? It had its own structural liquidity inside of it. I told you, I said that a structural liquidity cannot have a structural liquidity if by any means you see any break or structure that have structural liquidity inside of it, that is your internal. This thing had structural liquidity inside of it before breaking inside. This thing is an internal. The entry model that price used to buy here is called reclaimed block. Reclamation, that's the entry model where price has to take out an internal, either an inducement or a disruption. He has to take it out before buying, before going in the direction whether buy or sell. So this was a normal liquidity, an inducement liquidity, but got taken out. First of all, let us check the qualification, the structural liquidity that was inside this particular inducement that got taken out. Permit me to just draw it by the side, not on top of it, so that we can see it clearly. So from here, the structure broke at this point, so it stopped here before this retracement. So we're putting it here. I'm just going to put it a bit down so that I won't cover the diagram. Now let's look closely. How many structural liquidity occurred here? Now we had the series structural liquidity. How did it occur? This candle came here. The last point was up here. I don't want to cover it. It's this candle. When I point it, I'll just move it so you can see it. It's this candle. Now it came here, and then what? The last low that it created was this one. That's why it's called a series candle. I used the name to call it, because it's like series of candle like moving. Okay, now it came down to this point. It later removed this one, this high, by breaking structure with it. This structural liquidity can break structure with whether the body or the week. This one, it doesn't really concern us. It can be body or week. So it came here and it took it out. So it's like what? This is the series structural liquidity. The other structural liquidity occurred again. The one that occurred next was the dual structural liquidity. Let me shift this a bit so you can check. Now the dual structural liquidity occurred out. This candle, since this is a buy, this candle closed below this previous candle, and then the next one was closed above it. If you go to the lower time frame, this dual structural liquidity is still going to be looking like this series in the lower time frame. In this series if you go to the higher time frame, like 4 hours, this series is going to be looking like dual. It's just like the time frame difference that made it to look like this, but this is still a break of structure. If you observe the movement of this dual, it looks like this comes down, and then what? The next one goes above it. It's still giving this V shape something. Okay, the only difference is that what? It don't come with so much candles like the series. It's just like on its own. Then again, the series occurred, the dua occurred again. This one closed below this one, and what the next one closed above it, still giving us that V shape again. If you go to the 5 minute time frame, it's still going to be looking like the series. The movement was like this. Please pay attention. And then what again? I think we do not have another structural liquidity again. Then this one that occurred now again was this one that occurred is dua. Yes, this is the dua structural liquidity. Could probably be series, but I will take it as dua. People might take it as series. Why? Because of it created this high here, and then it came below like this one, then it came below this one, and then another one came below. But actually the dua structural liquidity, this one closed below this one, and the next one closed above it, still giving us that. As you can see, this is how it looks. So now this thing I made up this point to be, I'm going to do a lot of structural liquidity examples for you for each internal I show you. Now it made this point qualified as an inducement. Let's assume market is at this point. Now this guy now became what? It became an inducement. But like I told you, you don't have to buy directly from an inducement. Imagine you were trying to buy here, you are out of the market for good, your money is gone. There is no how you want to keep your stop loss that you will protect this point, I'm telling you. But you're going to see a reaction. Surely you will see a reaction, but it is not going to hold. Because why? You are buying from an inducement, so it got taken out. Some of you, your entries are good and everything, but the only mistake is that the place you are entering from, your entry models are good rather, but the place you are entering from is wrong. So now this guy got taken out, and what happened? It became what? They now turned this structure, this inducement to what? To a sweep. They now turn it to what? To a sweep. To qualify for a new internal. So what this internal just needs to do now is just to create structural liquidity side of it. It doesn't even need to sweep a structural liquidity or anything, because it has swept multiple structural liquidity, and it even end up sweeping what? Sweeping an internal. But an entry model held at this point. An entry model held at this point. So this entry model that held is what now started creating new structural liquidity. Now don't forget, when this whole drama happened, they left their swing point here. Don't forget, after this structural liquidity sweep and everything, the last high was here, which means that what? This high, we should take note of this high, because when price was doing what? Clearing this structural liquidity, it left a point here for us. Now that point is where we look out for, that if price clears that point and it gives us structural liquidity before clearing that point, it has given us a new break of structure, which is what? A new most recent internal, which becomes our new what? Our new inducement. Because this inducement is no more valid again. The same thing that happened on gold. Don't worry, we'll get there. So now we have, like, from this point, hope I'm not too fast. Your candlestick look faint. I was the one that did the color like that. Shall I make it back to be thick? Okay, let me just make it the usual, because I don't know the one that people want. So let me just do everything. I usually use my candles like that. It's just better for me that way. The setting is not okay. It is to make you see it very well and understand. Fine, it's here. So now we have this point here. Now new structural liquidity started forming. This is the series structural liquidity. Assuming that this thing that occurred here, okay, occurred outside this point, this outside this high, this thing would have been like an inducement to us. But no, it occurred were inside this point. Because why? It created one structural liquidity for us inside here. Well, it is not valid. So now what do we have here? We have this series structural liquidity, then we have another series structural liquidity again. Everything that is just every of the break of structure that is happening inside, they are all series. We have this series inside here again, and then we had the dua. Yeah, the dua, look at it here. This one close below this one, the next one close above it, till we confirm the break of structure, making what this point a new break of structure confirmed. So until a new internal is created, there is no new because until a new qualities start forming again, this one is still valid to keep taking every other candles that keeps forming. Now a new one started forming again. Why did it form? It took out a structural liquidity. This is it. Did he take this guy out? Yes, it took out this structural liquidity. Now the first structural liquidity it took out is what? It's the dual structural liquidity. This one closed below this one closed above this one. It took it out. Now I also took out the, yeah, this one is still the dual structural liquidity. It still took it out again. And don't forget, the moment price takes out, creates this new internal here, it is now going to make this point to be what? A disruption, and the next one that is forming is going to be our inducement. So now from here down to this point, okay, because the new one started forming from here. Now the structural liquidity this guy created, let's check it out together. He created the series structural liquidity from here to this point. Okay, 20 candles came down, book structure. Yep. So then he created this one again, the series structural liquidity. This one, the dual, close below this one, next one close above it, and then keeps going. Then it created the series, came down, came up, and then what? It came down, it swept the series here. I also swept, it swept the two series. This guy won. This sweep is probability. Sometimes it doesn't sweep anything, but once it creates structural liquidity inside, it's good to go. And then what? It created those structural liquidity. This structural liquidity created is the series. This guy here, this high, and then it came back to break structure. It later came back again, created another series again. And from here down to this point, inducement. And now that entry model showed up again. It took out the inducement, and what happened there? After taking it out, it came back to do what? To buy. This entry model is actually a very good entry model. Is used for continuation, and the buy continued, taking out these inducements and doing what? Creating new inducement. So don't forget, when he was taking this thing out, he left this high for us again to look out for. And then what? It created its own structural liquidity. The structural liquidity created is what? This one. I wish you can unmute yourself, like, but there will be noise. I would have loved to like this interaction of which structural liquidity is this, and if you're in can you just meet like 3, 4, 5 persons, let them respond. I don't want to like do it on my own. Please, the people that will respond, make sure your background is not noisy. If you have baby crying, your mother calling you, anything, please just I want it a bit interactive, so that just unmute few persons per room. Anybody that you see noise coming from their background, mute them back and leave the rest. I just want it to be a bit interactive.
Okay, so please, if I unmute you, keep your own mic muted. Don't just start speaking, please.
When you're done unmuting, please tell me.
Okay, I've unmuted a good number of people.
Okay.
You can continue.
So this structural liquidity we have here, what structural liquidity? The series or dua? Good. Okay.
That is series.
That's series.
Okay. The next one we have here.
Another series.
Also a series.
Series also.
Good. Then series got swept by creating a new internal. But we have a little problem with this particular internal. Okay. Equated. Okay, now a structural liquidity was created inside. Which structural liquidity is this?
The
It's the dual.
Yes, that's very good. It's good at your understanding now. Now, I say some structural liquidity, some inducement do not sweep structural liquidity. For example, now this particular one that we are using, you can see that it did not sweep anything here before the retracement. Okay, it did not sweep anything. So which structural liquidity did it create? Okay, this is where it created. Did it create here?
The dual.
Series.
Series? No, dual. Close below this one.
Yeah,
And then, are you not seeing it? Close below this one, and then the next one close above it. Which structural liquidity this one created again? All of these guys are together.
Is it from which point are you taking your red candle? Where is it, your red candle starting from? Ma.
Like the new internal.
Hello, man.
Yes, I can hear you. The new internal. Four red candle. Let's continue. Now, which structural liquidity is this
No.
one?
Where do you take your? Okay, yeah, from the. Is it from the new internal you took those candles? Because I'm seeing like series of red candle down.
This one.
Then
here.
before this
one here.
bull run.
This one here says bull run. Is it this one here?
This thing is breaking though.
Let's just continue. I don't understand what you're saying. Which structural liquidity is this one?
It's kind of like what you are trying.
That's also there.
Series or dual? Which structural?
Yeah, this place, yes. Where just shift your hand a little bit. Where those series of red candle. Then you now saw.
I shifted this thing so that we can see. This is where it ended. Here, the next leg started forming from here. I shifted it a bit like this so that it's not going to cover when I ask which structural liquidity is that. Which structural liquidity is this one? This one I'm pointing. People don't know. Which social liquidity is this one?
Dual.
This is a series.
Series.
You know why you are confused? Because so many candles. It's actually the series. You are right. I thought I want to say it's dua. Somebody said dua. It's not dua. It's the series. Now look at it's the series. Now it moved this way.
Is a dua?
No, it's the series. The last high price created was this high, and then it moved below like this. Any break of structure that looks like this, that price is moving in the normal V way like this, that you don't have to go to the lower time frame to see it, is the series. Look at the way it moved. This is the series. This is the dua. This one here is the dua. Any candle that is more than 2-3 is series. This one is dua, it closed below this one, and then what, the next one closed above it. This one is dua. This one is series. This one, it closed here, this one ended here, and it kept going down, and next one closed above it. This one here is series. This one here is dua. With the way I'm explaining this, I'll be very disappointed if I hear that anybody do not understand. Now, there's a new once you see price has just swept an a structural liquidity, it means that it wants to form a new one leg, that is a new internal. Okay, now he created this guy, he swept what, how many did he sweep? 1, 2, he swept this the series here, and he swept the draw as well. In short, he also swept this series here too. He swept the 3 of them here, and then what, he started creating his own structural liquidity. That's what is forming a new leg for us now. So let's continue.
So, ma.
Okay.
Let me ask. So, if for a new internal to be created again, that means price have to sweep the previous
structural liquidity.
Structure.
It's not compulsory. If you sweep, fine. That's a good quality. If it sweeps,
Okay.
if it does not sweep, but it creates its own structural liquidity, can go. I showed you example of the one that did not sweep anything. This one here, it did not sweep anything. He all created its own structural liquidity and started moving. This one, it did not sweep anything. It did not sweep. Look at where the structural liquidity was. It did not sweep it.
Yeah.
Yep. So let's go. Which structural liquidity is this one? Everybody should know this one now.
This is a series.
That's the series.
Series.
A series structural liquidity.
Yeah, that's the series.
Series.
Another series was formed again.
Yes.
Then the dwarf formed.
Yes.
Then series formed again. Dwarf formed here. Series formed here. I will move this thing so you can see it. This first one here, I will move this thing. This first one here was the dwarf. This second one here was series. Let's check it out. I told you whether because structure with body, because structure with weak, for this structural liquidity is not really their concern. They can break with anything they like. This one closed below this one, and the next one closed above it with the weak, but that did not change the fact that what, this is a structural liquidity. So this guy here, fine. This one is the draw, and this one here is what is the series. Simple. And the price swept the both of them out. Even came as far as sweeping the next structural liquidity, which I think this one is the this is the draw. Close below this one, next one close above it. Also swept the guy. This one, the week was very long, and then what, it started forming his own new leg, but could not break structure. Unfortunately, I could not break structure. So we had this point here before. This is the swing point he left before clearing these guys. So we had this guy here. This is where the guy got taken out finally. And then, you know, some structural liquidity are really big. Example, this one is really big, because this guy was supposed to break this high. I don't know why he got so foolish. He's supposed to break this high, but he did not. He's supposed to like do something like this, so that we know that we have this leg, and then this one would have been another leg, but he did not. Only the market knows why. So this guy is a structural liquidity. This guy is a structural liquidity, and they created another one from here down to this point. So everything inside now just got probably invalidated, because we thought it would have taken this high, so that it would have just been this guy, the draw structural liquidity, draw, yes, this is, sorry, series, but he could not take out this high. And then he just created one big series. This one is very big one. and then it did what, it broke it. So yeah, another one leg was created with this structural liquidity that was formed inside this one, which this one is the series was formed here, and price swept it. Once it swept it, you just know that a new one is forming from that leg, and then it created the dwell. Hope you can see it created the dwell here. It created the dwell, this one here, and then what the price do, it came back to take out this inducement. Look at where it took out this inducement. Sorry, this is the big construction here. It swept this guy. My bad. It swept this guy here, and then did what, came here. So it created this guy, the structural liquidity that validated this whole sweep that it did here, to making it a new internal, which is our inducement. And the price did what, it came back and it took it out. And it took it out. That entry model showed up again. I told you it's called reclamation. And then what, after taking it out, it bought from the this is not direct entry at the inducement though. This one is when the inducement has been taken out. You see that every time you try to buy directly at this inducement, it keeps failing. That should teach you something. It keeps failing. That should teach you that it's not holding. It is when it comes back to buy that it now works. And then it bought. Then some people were trying. Sorry? What did you say?
Point. Can you point the inducement here? I cannot
Okay,
this
is the inducement, this one. But the inducement got taken away and price created a new inducement here. After clearing the inducement with that entry model, I said, after clearing it, and then it then broke structure and it created new inducement that still failed. Okay, but that doesn't mean that we entered the downtrend immediately. No. And then what happened, price now came back to this disruption, and I told you why this disruption. Maybe I did not say the full reason, but I just told you that this disruption will not hold. When you get to entry, you will know why this entry and premium and discount zone model, premium and discount will also tell you why this thing did not hold. Okay, and then what, it got taken out, and what happened, price sold from here with a breaker block. 50% of this field guy was where I sold from. Most of you saw my analysis. I left at 1 to 3. And that was it.
Ma, please, what do you mean
by breaker block?
The disruption not holding, because from your previous classes. Okay, breaker block. Can you explain it, ma?
We have not got into entry yet, so I cannot explain breaker block. That's an entry model, but there is a but.
Ma, please, can you use the one of the shapes to draw the series and the dual structural liquidity?
I should use one of the what?
The shapes to draw the
shape.
dual and the series.
What shape?
Structural liquidity.
What shape? You mean this thing I should draw like this?
So not that one, not that one.
Then what?
The lines.
Look at them everywhere now. This is dual.
Like not on the chart.
Then where again now?
I just want to. Yes. Let's say this place. Just use this place to draw how it looks like on the chart. This space here.
I should draw it like a weak candle.
You know,
I don't understand you.
I think he's saying that you should use a line to draw it instead of using the rectangle.
I should draw it like this. There's no I can draw it like this now. It's still going to be looking like this now. It's going to be looking like this. And it's now going to be looking like break of structure. Like it's an internal. That's why I usually use this box. Because those things are small.
So you can't use it to explain the series and the dual
I already
structural
explained
liquidity.
it on the chat now. That's why they were saying the group. I should use the chat, and I gave more than like 10. I gave up to like 30 examples now. If you count from where we started, down, down, down. I don't know how to draw this thing with this thing because it's looking like break of structure, like internal or external or something. Because it's the thing we used to explain internal, external. So using it to explain as small as this. You see how small this thing is here. How do I use this
Yes,
thing
ma'am.
to explain
Hello.
it? Yep. See how it's going to be looking.
Hello, ma'am.
I'm
Um,
listening. I'm hearing you. You're saying
hello.
something. I can hear you.
Yeah, so I want to ask you a question that since that disruption did not hold, does it
Okay.
mean that goods will start selling off like that?
Internally, yes. Internally.
Okay. Okay, and I want to ask that is it because the disruption week did not break structure? That's why that disruption did not hold.
A
Is
book
that the
structure
reason
now. A
why?
book structure now. Look at structure here now. That's not the reason. I will say the reason when we enter the premium and discount and entry. That's not the reason. But number one thing, inducement has to be. That's why I've not explained it because I've not explained discount and premium. The distance between your inducement and your disruption matters a lot. Okay, if your inducement is very far, then it's making your entry difficult to hold. That's just the truth. But we'll get to that. So we are going to stop here for today, and I hope.
I believe I have a question.
Okay, ask.
Now, I want
Okay, ma'am, please,
to.
can you go to where you started the explanation of this structural liquidity, where you draw the series candles and the dual candles? You just use the rectangular this thing to
I've cleaned.
do
I've
it before
cleaned.
coming to the chart.
I've cleaned that thing. I've cleaned it because I needed space.
Okay, okay. Because there was something confusing there. The dual was a combination of three candles. Then for the series, it was a combination of many candles. Then if you want to look um, um, on that series, down the down part of that series, the three candles there is just it's just similar to the dual candle you drew. And then you said that the series cannot have um, dual, that is the dual candles in it. That
When you
once
get
you
one
have
broken
dual candle in
structure,
it, it's an
yes,
inducement. I think I
yes.
didn't get that explanation well.
Just like this high now.
If
If assuming that this thing broke this structure here, this new thing that formed would have been a new internal. Okay, but the fact that all the break of structure is occurring inside this point, it is invalidating anything that would have made them stand on their own because they are still inside this swing point. That's what I meant. You know, see, as this one now struggled to come out on his own when he took out this structural liquidity and he managed to create one structural liquidity and he broke this high, it was classified as an inducement despite how small it is. No, some people don't even notice that there is an inducement here. That's why they miss this entry. So it just depends on, you have to open your eyes to see. This one does not even concern the color of the candle, whether it's even pure black. I can still trade it because I'm not concerned of the color of the candle at all. So we're going to end the class right now. Everything you have as a question is inside this video. This video is getting too long. This is over an hour 30 minutes. Every question you have, I explained it here. Any one that you feel like is not explained here, ask the question by 12 p.m. Thank you so much and have a lovely.
Okay. Yo, later.
My his class recorded.
Of course now.
Oh, thanks.
My don't
Ma, is this class?
1 hour 30 minutes.